Cash reserve planning is the process of setting aside money that is not meant for growth, expansion, advertising, or new equipment. Its main purpose is survival. Every business faces unexpected situations, such as slow sales, delayed customer payments, equipment repairs, supplier price increases, economic downturns, or seasonal demand changes. A cash reserve acts like a financial shock absorber that helps a business continue operating during difficult periods. Imagine a small landscaping company that spends about $5,000 each month on payroll, fuel, equipment maintenance, insurance, and other operating expenses. If business suddenly slows because of bad weather for several weeks, the owner still needs to pay bills. Without a reserve, the business may be forced to borrow money at high interest rates or delay important payments. A simple approach is to calculate average monthly operating expenses and build a reserve equal to several months of those costs. The goal is not to make a profit from this money. The goal is stability. Many business owners focus heavily on increasing revenue while ignoring liquidity. Revenue can look impressive on paper, but cash is what keeps the lights on. A practical rule is to treat cash reserves as a permanent business asset rather than money waiting to be spent whenever an opportunity appears. Let us look at a simple example. Imagine a small online store that generates average monthly sales of $20,000. The owner feels confident because sales appear healthy. However, monthly expenses, including inventory purchases, software subscriptions, shipping costs, advertising, rent, and employee wages total approximately $16,000. This means the business needs $16,000 every month just to operate normally. If the owner decides to maintain a reserve equal to 3 months of operating expenses, the target reserve would be $48,000. Instead of trying to save the entire amount immediately, the owner could transfer a percentage of profit into a separate reserve account every month. Suppose the business earns $2,000 in monthly profit and the owner allocates $1,000 toward the reserve fund. Over time, the reserve grows without creating financial stress. Then imagine a major supplier suddenly increases prices, reducing profitability for several months. Because the reserve exists, the owner can continue operating smoothly while finding alternative suppliers. This example shows why cash reserve planning is not about pessimism, it is about preparation. Successful businesses understand that unexpected challenges are normal. A reserve fund provides time to make smart decisions instead of rushed decisions driven by panic. Cash reserves become even more important when customer payments are delayed. Consider a business consulting firm that invoices clients for projects. The firm completes the work today, but some customers may not pay for 30, 60, or even 90 days. During that waiting period, employees still expect salaries and vendors still expect payment. Imagine the company spends $10,000 every month on operations. Suddenly, a large client owing $15,000 delays payment because of internal approval issues. Without reserves, the business owner may struggle to cover payroll. With a properly funded reserve account, operations continue without interruption. This is one reason experienced entrepreneurs often separate profit from reserves. Profit is money earned. Reserves are money protected. They serve different purposes. A practical method is to review cash flow trends from the previous year and identify months when cash balances were lowest. Those weak periods reveal how much reserve protection may be necessary. Many businesses fail not because they are unprofitable, but because they run out of cash before payments arrive. Strong cash reserve planning helps bridge those timing gaps and protects the business from short-term financial pressure. Different businesses require different reserve amounts. A company with stable recurring revenue may need a smaller reserve than a seasonal business. Imagine an ice cream shop that earns most of its revenue during warmer months. During slower seasons, sales may decline significantly while rent, utilities, insurance, and payroll continue. If monthly operating expenses equal $8,000 and the owner wants protection for 6 months, the reserve target becomes $48,000. Throughout the busy season, part of the extra profit should be directed toward the reserve account instead of being spent immediately. Many business owners make the mistake of assuming strong months will last forever. They increase spending during profitable periods and leave little protection for slower months. Cash reserve planning encourages long-term thinking. Every dollar placed into reserves creates future flexibility. When competitors struggle during economic uncertainty, businesses with healthy reserves can continue marketing, serving customers, and investing strategically. Instead of reacting emotionally to temporary downturns, they can focus on opportunities. The reserve account becomes a source of confidence because it reduces dependence on emergency loans, credit cards, and other expensive forms of financing. Creating a cash reserve plan does not need to be complicated. Start by calculating average monthly operating expenses. Next, choose a target reserve amount based on the stability of the business. A stable company may aim for 3 months of expenses, while a more unpredictable business may target 6 months or more. For example, if monthly expenses are $12,000 and the reserve goal is 4 months, the target becomes $48,000. Then create a consistent funding system. A percentage of profit, a percentage of revenue, or a fixed monthly contribution can all work effectively. Keep the reserve in a separate business savings account so it is not mixed with daily operating funds. Review the balance regularly and replenish it whenever money is used. Think of the reserve as business insurance that you control. It may seem unnecessary during good times, but its true value appears when challenges arrive. Businesses that survive economic uncertainty are rarely the ones with the highest revenue. They are often the ones with the strongest cash management habits. Cash reserve planning provides stability, confidence, and the ability to make better decisions regardless of what happens in the market. Also, don't forget to follow these 10 steps to build and grow a strong cash reserve fund for your business. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.